Hi everyone, welcome to Behind the Scenes EMA Mortgage Podcast. I'd like to give a shout out to a client of mine. His name is Arsalan, and he's actually the one that inspired me to do more of these podcasts and more and consistent. Thank you, Arsalan, for the talk. Now, our topic for today is the CMHC, how they admitted that tightening was a mistake. So sometime last year, June 2020, they changed some of the rules from what it was to 3240 GDS TDS guideline. We can get to that a little bit later on. But before that, I'd like to talk to you guys about an interest of mine, which is NBA. The NBA draft is going to be on July 29th. The Raptors, our local team, was lucky enough to get the number 4 pick. I think there's 3 major players that are in line for that pick. So there's really 5 great players or great potential players that could be picked there. The consensus number 1 pick is Cade Cunningham. He's a really tall guard that has superstar potential. Now, for the number 4 pick, the Raptors have 3 possible players that they can get. One is Jalen Green, the other is Evan Mobley, and lastly, Jalen Suggs. The more likely scenario, according to some of the draft, professionals out there, or at least the mock drafts that's been out, the Raptors are potentially in line to get Jalen Suggs, a smaller point guard, very athletic, and certainly could be a difference maker, especially if we potentially or likely lose Kyle Lowry. So July 29th, we have an NBA draft that we should be looking forward, at least I'm looking forward, and it looks like we might be able to add a really, really good young player. Now, going back to our podcast topic of CMHC admitting that the tightening was a mistake. So as I mentioned before, the old rule prior to this recent change, CMHC operated with a GDS, or home-based expenses. Up to 32% of your gross income can be allocated for that, and then only up to 40% for all your total debt. So that includes your home-based expenses of your total gross income can be for the total amount. So we went from 3240 to the regular one at 3944. The main reason I say regular one, prior to them changing it last June, both all of CMHC, SAGEN, and Canada Guarantee had it at, or has it at, 3944. So 39% of your gross income before taxes can be allocated for home-based expenses, and 44% for all debts, including the home-based expense. So they upped the GDS TDS number, which basically means that as a borrower, if we're looking at CMHC, we can get more. Our capacity to borrow is more today than what it was a couple of weeks ago. Now, why did they do that? Well, because of that change, CMHC made the change to a more conservative 3240 last year, but SAGEN and Canada Guarantee did not follow suit. So what happened is that CMHC lost market share. It wasn't effective because of that. Now, this change over from the old 3240 to the 3944 doesn't really affect you as a borrower at all. So although it's seen as a good positive change, as an individual borrower, it doesn't really affect you, because as mortgage experts, if we know that SAGEN or Canada Guarantee will fit your specific scenario, we would ask the lender to send it there. So we're not limited to the 3240. Now, with the new change, CMHC, Canada Guarantee, and SAGEN are all in play for all your deals. Now, that changed to be, to have it at 3240 from before. The goal was, according to CMHC, was to protect home buyers or reduce the taxpayers' risk or basically be more conservative in that route, because we were in the middle of a pandemic, and I guess CMHC felt that they can dictate what happens with with how much borrowing an individual borrower should be borrowing. Effectively, because all the private insurers, the other private insurers, didn't follow suit, so it didn't really work. Now, what happened is that prior to the pandemic, where before they made the change, CMHC had around 45 to 50% market share, where they were the dominant force out of the three mortgage insurance companies out there. Now, once they made the change, as of a couple of weeks ago, CMHC went from 45-50% market share to 23% market share. Sagen took around 44%, and Canada Guarantee made up the rest at 33%. So Sagen, then Canada Guarantee, and lastly CMHC had the market share there. So I think this is a way for CMHC to get some of that market share back, and it'll be successful because it is something that makes sense. They'll be successful because they are a government body that have inherent advantage in terms of acquiring some of those market back. The change in itself is a good change, because that means it's less likely that the rules will be in effect at 32% and 40%, the GDS, TDS qualification. Now everybody's at 39-44. We should expect that to be the rule moving forward for for the next immediate future. Now, aside from changing the GDS and TDS, they also lowered the credit score requirement from 680 beacon score at minimum to at least one of the borrowers at 600 beacon score. That's also a good change. Now, we talk about CMHC, we talk about Canada Guarantee, we talk about Sagen. There's something I'd like to discuss, maybe something for you guys to think about. I always wonder, why are the buyers still paying mortgage insurance premium to guarantee the bank loans? Surely in today's markets, the banks can underwrite a more effective way where our buyers are not paying for the mortgage insurance premium. I don't know. Thank you for listening in, and have yourself a wonderful day.